So let's do part 2 of this video. We've got the H1 range, H4 range, I do apologise, and let's now have a look at H1. So H1, sorry about all the lines, but we went straight down to the lower time frame, didn't we, M15. But H1 is clearly showing no momentum to the long side. However, we have, I'll explain the MACD now. The MACD is effectively a proxy for the RSI histo higher time frame. So, and by higher time frame, I mean fractal higher time frame. So swings break down into fractals of 4. So an H1 candle should have 4 internal swings minimum, which would be M15. It's actually better to have 6. So it's like D1H4. The 6 H4 candles to each daily candle. 6 4s are 24. Hope that makes sense. So 4 minimum, 4 or higher. 3 isn't right. Like an M15, the internal swing is not M5. M1, M5 is good. So you've got the internal swing. So, look up fractals on my YouTube channel. I've made well over 1,000 videos. Fractals are explained in detail on those older videos. I am intending to update everything for a later stage, but that's when I get settled abroad. So, so this is suggesting we should be long. Let's have a look at and as you can see, you've clearly got on this H1 chart an uptrend, a strong uptrend in place. H4 agreed with that as well. Massive, huge uptrend going on. So we should only really be looking for longs. You know, as you can see, the MACD, I love this scenario where the MACD changes from red to green. That's why it's on my charts. Doesn't repaint. None of my indicators repaint. Once the bar closes, that's the color it is. So if this next H1 bar closes green, say for example, that is potentially a start of this. Now, as I always say, we want to be bust, pullback, break and close. So bust, pullback, break and close above the high of the bust. We haven't got that scenario on the TMA. This is what I mentioned earlier. It doesn't always happen like that. But ideally then, if we carry that over to the MACD, the best and strongest signal is probably this second MACD green bar. Okay, so it's wise to wait for the MACD to test the high of that one, break it, not necessarily close through it, but then we've got two other methods of two other methods on this one time frame of analyzing whether we think we can trade it long. And remember, I am a candlestick analyst. I mean, I can't even tell you the amount of experience, the amount of hours. It's way over 60,000 hours I've spent doing this stuff now. So I understand the open and close of the candles and the closes above them. I understand the multi-time frame. I mean, this is one time frame. I understand the higher time frames. I understand the lower time frames. I understand the trend lines. So, you know, you've got a vast amount of information on multiple time frames to be able to call upon for every trade. And remember, this is really, really important. You only need one good trade, depending on your time frame you trade, a month, a week, a day, or an hour, whatever. One good trade is just, it's a job. What we do is a job, guys. You know, we are here to make money, to keep a roof over our families' heads and food in their bellies. Anything else is a bonus. You know, if you want to get rich from trading, that's up to you. If you just want to live an absolutely fantastic traveling life like I do, then that's good. You know, it's not all about the money, guys. I mean, for me, half the battle is just understanding charts to the nth degree. It's just an obsession for me. So okay, so we've got the H1, and remember this still is telling us what we should be doing on the low time frames, right? 15, 5 and 1. So H1 here is flat. We're still flatlining. That tells us that, which is important. The minute this turns green, you'll find the price has started moving up. If it turns red underneath, closes red, then price is likely to be moving down, because the angle of those bars will be down, and it's broken out of a flat area. That's why I love this. This is messy. The TMA, I decided to darken and then just wait for the green. So all of this I'm not interested in. It's when they turn green, that's when I start to get extremely interested. This one, because it's an hour chart, will start flickering green. So then all I have to do is drop down on the lower time frame. I'll try and explain what I mean. So this is going to start turning green way before potentially the candle closes. This may have been a super fast news related candle or something, but what I'm trying to tell you, we've put the vertical on there. See, this is interesting. This is changing from green. There are no traffic light, sort of black and white ways to look at these. There are the bus pullback rank close, but then there's another dozens and dozens of additional ways to trade them. I've always said that. So let's take the scroll off. But I try not to complicate things if possible. Now look at this on the M30. That H1 will have been changing what I call flickering green. The H1 might have changed to green 15 minutes into the new candle. You've got 45 minutes to mess around. So we can then read what the candles and all the other indicators are telling us on this lower time frame. So instead of waiting for the H1 to close right up here, 2 M30s, this is the business here, we can get in based on what the H1 is telling us, what the M30 is telling us, and what the M5 is telling us, M15 is telling us, and M5 and M1. So newer traders, you need to get that into your head, under your skin, whatever, under your belt, whatever. So, and this is how we can trade 10, 15, or we can find 10 or 15 trades a day and preclude the fear of missing out, which is my whole reason for creating the 3CR from the 2B reversal and 1, 2, 3 reversal. Because if you eliminate fear of missing out, you eliminate taking bad trades, because there's 2 or 3 dozen possible trades around. And that's why I chose scalping over swing trading, long-term trading, because I can go for a walk, come back, take a trade. I can go and play golf, come back, take a trade. I can go swimming, come back, take a trade. I can take a trade based on virtually every M15 candle close, really, and then qualify it with M5 and M1. So just a little addition there. So H1, the current H1 wasn't telling us anything at all, but we've got these H4 breakout levels. Remember, we can target them if we get the right lower time frame Bollinger Band alert trigger. I know it's off at the moment, switched off in the last video. We can use this to decide whether we're going to be attacking these H4 ranges or up or down. We're in a very flat period on H4 and H1, but there's no reason why we can't use the lower time frames to find trades. Now, this is no surprise. All of this is no surprises on BTC on a Saturday. There was a little bit of excitement late night on Friday night, and then everything's gone pretty flat. Even this lot here was not very interesting, because remember, BTC does have a pretty horrendous spread. So at the moment, I've traded for a few quid, pennies, whatever you want to call it, at the weekends. I don't bother anymore, because it's just not worth, there's so many extra trades now because of all the improvements I've made over the last 6 months or whatever. It just never stops improving. So M15 is, there's nothing of value there. Really, I just want to attack these two H4 levels, or wait for the breakout and look at potentially what this is going on. I mean, if it breaks out of an H4 high, then it's liable to, this was the H4, wasn't it? Apologies there. Yeah, it's more likely to do this. Come back and test this high and the H4 high. Prepare for a deep test. And then like that. So, and I won't do the same thing on the short possibility, but you understand what I'm saying. So, and we know using H1M30 whether we're going to be in the right direction. That's all there is to it. So we're using multiple time frames all the time with momentum, and you know, the slope, the trend, whatever you want to call it, the 3 CRs. I use everything in my toolbox every trade. So we don't really need to do M5 because we haven't got anything. You know, you've got divergence. You can look that up on my YouTube channel and Twitter, of course, Best Forex Method, both feeds, and learn about all the other ways that I trade: divergence, double divergence, inverse divergence when there is no, when it's so strong to the long side. You know, divergence I tend to trade is the this sort of divergence. I forget which the terminology is. I don't need to know the terminology. That's interesting to me because the MACD doesn't really show divergence very much, but that's pretty flat. If this was a deep dip down, pullback down, and this was divergent, that would be a really exciting signal trigger, if you like, for possible longs. But and then M5, obviously, the lower the time frame, the weaker the actual signal is, but it's all relative to the trades and the targets and so on and so forth. So never say never. Scalpers can scalp anything and make money from anything. And as I said, I think in the previous video, I lose track sometimes, the biggest problem with your trading, it was in the last one, wasn't it, will be your discipline and patience, waiting for trades. So the more trades you are able to take is a double-edged sword, because it means if you're greedy and stupid, you're going to take too many and overtrade. But it is also, if you understand that you still don't need to take 24 trades just because you see them, that's the patience bit and that's the discipline bit. If you take that on board, and it takes a long time to control your, you know, your adrenaline over trading, because you might have taken 1 or 2 or 3 trades, and you might have taken what you used to earn in monetary terms, a month's money in a day. So it takes a lot of controlling, guys. It takes years and years and years of training your brain, like memory muscle memory, should I say. It takes years to develop that, and really control your adrenaline, your urges to overtrade. It even now, I catch myself doing it, but fortunately I make less and less mistakes because it becomes second nature. And if you followed me for a while, you'll know I've had a rotten cold for about 6 or 7 weeks, feels like months. But even throughout that, whereas people used to say never trade when you're feeling under the weather, never trade when you're feeling ill, when you're sick, stressed, whatever, I know I've turned a massive corner in terms of muscle memory, because I can trade through illness, hangovers, stress, whatever. Trading is the only thing that I can do that with, and it's because it's second nature. So, well, one of the only things I can do it with. But you know, trading is a journey into your own self, your person, what you are, and it teaches you so much about yourself. Anyway, sorry, I've rambled again, but this is part 2 of the original BTC weekend analysis. Thanks for watching. Have a great day.